CRA was created within the context of redlining in the late 60s and early 70s. Redlining was the process whereby banks would look at communities, particularly low-income communities, and literally draw a red line around that and decline any loans that were applied for within that area. The effect of redlining was that credit essentially dried up in those communities, making it impossible to buy a home and to start a small business.
Before the latest financial crisis, saw a lot of communities get new investments in terms of whether it was single-family homes or commercial properties, and we really saw a rebuilding of local communities' economies.
The Chicago Community Loan Fund is a private, nonprofit financial services intermediary that provides loans to for-profit and nonprofit community developers and social enterprises. The banks are encouraged and incentivized through the Community Reinvestment Act to invest in community development financial institutions like CCLF.
The CRA is really dependent on the relationship between deposit-taking financial institutions and the communities that they serve. When deposits have migrated out of financial institutions that are traditionally covered by the CRA, so they've gone from banks and thrifts to investment firms, to retirement savings companies, to insurance companies, to mortgage companies. In many cases, those are the financial institutions that are really creating a lot of the wealth building opportunities within our communities. So as we see deposits leave institutions that are covered by CRA, it's important to expand CRA to cover the entire range of financial services so the wealth building opportunities can continue to flourish.
Having new actors that heretofore have not been incentivized by CRA would bring a number of large financial services firms into the fold in lower wealth communities. We would have a larger array of investors and funders so that we could increase our loan size, we could significantly increase our loan volume, and also have a wider panoply of partners to pull into the projects as follow-on and take-out lenders.
Woodstock Institute's research, policy development, and advocacy activities have been critical to expanding CRA and to making sure that CRA is modernized in a way that those financial institutions can continue to be accountable. In many cases, CRA exams come and go, and very few organizations even know about it. Woodstock's role is really to communicate advocacy opportunities to community development stakeholders in the Chicago region to make sure that when a comment period opens for a financial institution, that they can really work with regulators to help them better understand how well a bank is serving its communities.
When we're trying to educate our elected officials and other policymakers about the importance of CRA in general or the urgency of CRA reform, we turn to the Woodstock Institute for their research, for their data, for their just-in-time, real-time analyses of financial trends and outcomes that impact the communities that we serve.